Back to the channel. In today's video, we're going to get you up to speed on what's been going on in the market and why the market essentially did what it did today and pulled back. The only way you can really understand that is if we take a look back over the past couple weeks and understand what's been going on, A, in the market, but B, in the volatility index. So stay tuned as we go through both these markets. First things first, you must understand the sort of chart and system that we're operating in order for you to make sense of it and for you to use it in the future. So we have a 30-minute open, high, low, close, 50 SMA system that I spelt wrong on the screen. Who cares? So you need a 30-minute time frame, a 50 simple moving average, and you need to put on an SPY chart or an SPX chart. Make sure there's no pre-market, no after-hours data. If you have it set up like that, you're set up correct, good to go. So what you first understand is that if the price of the market is trading above the 50 SMA, the market's in an uptrend. So that's it. And when the price goes below the 50 SMA, it's neutral to bearish, but you're not long bias sentiment to the upside until the price recovers the 50 SMA. What I'm going to do now is I'm going to walk you through the past of this system. That way you can get more familiar with it as we lead into the rest of this video. So stay tuned. I've taken a very zoomed out view on the 30-minute chart here just to kind of emphasize the importance of this system and obviously its main function, which is to dictate uptrends and downtrends within a macro sort of time frame. So that being said, let's grab our highlighter tool. Ready? When price is below, markets are down. When price is above, markets are uptrending. When price goes below, down. When price above, up. Price below, down. Price above, up. Price below, down. Price above, up. Price below, down for a very short period of time, back up and over, up. Down consolidation, back above, up. We're going to continue on just so you kind of get the point. So here we are again, highlighter, when price is above, up. When price transitions below, down. Price above, up, so on. Price below, down. Price above, up, etc. So now that you understand the main function of the system, it's to it's to dictate uptrends and downtrends. So we'll continue on and get you up to speed. So the simplest way to really get you to understand what has happened here in the market, really today and over the past, like say, day and a half, is the market was in an uptrend. And the market had a very successful long biased buying program until today / end of day yesterday, where the market started to pull back very aggressively. Where to? The 50 SMA. So the simplest way you could think of this is just it was the markets going into an uptrend and now pulling back to their uptrend support. That's it. And now the markets get the opportunity to decide whether or not they want to go into a selling operation or not much of a sell operation and then back to a new buy operation when the markets go positive. So what we've seen over the past day and a half is the markets pulling back within a macro uptrend. But there's more to it than that. And that's where we're going to start diving into the volatility index. So stay tuned. So as you can see here, we got two charts side by side, one being the S&P 500, the other being the volatility index. This is to better help you see the relationship between the two. We analyze not only S&P 500, but also the volatility index on the same time frame in same system. 30-minute, 50 SMA, open, high, low, close, no pre-market, no after-hours data. The reason we do that is it gives us the 50 SMA calculation that we're looking for. When we use 50 SMAs and we calculate them on pre-market and after-hours trading, the calculation is different than that of a just regular trading hours 50 SMA calculation. And it's the regular trading hours 50 SMA calculation that we're more interested in. That's why we run the open, high, low, close, meaning price calculation is only from the open, the high of the day, the low of the day, and the close of the day, not the after hours and not the pre-market. So if I ever say open, high, low, close, 50 SMA trading system, that's what it means. Just a SMA calculation throughout regular trading hours, no after hours. So the reason I've brought up both the VIX and the SPY next to each other is to learn the relationship a little more. But what I really want to start with is getting you to understand that the same thing that we're looking for on the SPY to go into an uptrend and a downtrend is the same thing that we're looking for on the VIX. So for example, what do we have over here on this, whatever this was a couple weeks back, right? Market goes over the 50 SMA. So we are long bias traders in long bias analysis, in long bias forecast, long bias titles of YouTube videos, long bias tweets. We are long bias in the comments of somebody else that's streaming on YouTube, stock market. So we'll go in their YouTube stream and say, hey, the market's long bias, which we do. If the market enters a buy signal, I will go to other YouTube streams that are on the internet and make sure to mention the markets enter a buy signal. That way, some of the traders on those streams are up to speed that we're in an uptrend. So when you have the market going into an uptrend, things go up. Same thing with the VIX. When the volatility index, as you can see what I'm about to draw on the screen, goes from a downtrend and then gets into an uptrend, volatility is more likely to spike. Okay? Let's zoom out to the past a little more. Here's another good example. Ready? When volatility goes from a downtrend, which is, again, breaking below the 50 SMA, to breaking back over the 50 SMA, volatility increases. 9 times out of 10, if the volatility index is uptrending over its 30-minute 50 SMA, the market is usually in a downtrend. But that's not always the case. Just like the past couple days. So now what I'm going to show you is the past couple days on the volatility index, maybe the past week on the volatility index, to help you understand why the market was a little goofy this week. As we mentioned before, generally, if the volatility index is breaking up into an uptrend, meaning volatility is increasing, usually the markets are in downtrends. But over this past week, we saw something which we don't get as frequently, which is the markets being in a buy signal or a uptrend, and the VIX going into a buy signal and an uptrend. That's where the markets are starting to kind of detach. They're not quite moving as they should. They're having some divergence. So let me show that to you. Let's walk this through. So we know that the day after FOMC, the market goes into an uptrend. So we're long bias. As a result, markets go up. And then today, let's just say the market dumps. But it's still in a buy move, right? It's still over the 50 SMA and it's still positive. What I'm trying to teach you here is how you identify that markets are getting ready or can be pulling back, even though they're not in a downtrend, right? So think about it. Market enters uptrend. I say we're long, but then all of a sudden the market gets smoked, and you're like, Connor, what the heck? You said we're in an uptrend, but all of a sudden the stock market sells off all day. What the heck? That's true. Let's look at the volatility index. What is the volatility index telling us? The volatility index just yesterday at the end of the day, where I put that yellow line, started breaking above the 50 SMA, which is a buying operation, or it's an uptrend potentially starting on the VIX. If an uptrend starts on the VIX and it's successful, then the VIX will increase, which is volatility increasing. And if we look left and we look at the stock market and go, the stock market's in an uptrend, it's not below its 50 SMA, so it's not a macro bearish environment, but the VIX is breaking out. That tells us to hold off on the long. Even though it's in an uptrend, and we're not actually in a bearish macro swing environment, the VIX says, I'm breaking out, volatility is going to increase, slow down on the long. So this is how we use the same trading system on two different markets to essentially help trade the S&P 500. The day after FOMC, the markets went back into an uptrend, so we could be long bias. But the whole time this market is going up, the VIX is not really going down. And then just yesterday, the VIX starts an uptrend. If the VIX is going into an uptrend the same time the market's in an uptrend, you scratch your head and you go, something's not adding up. One of the markets is wrong and one of them's right. Whether it's the VIX or the market, time tells, and it always corrects itself. So over this past week, what we saw was an uptrend start on the S&P 500 after FOMC. At the same time, we saw the volatility index break out into a buy signal just last night. So both markets can't be going up at the same time for forever. One of them has to be wrong. In this case, it was the S&P 500, and the volatility index was correct. The volatility index went into an uptrend, and as a result, we pulled the stock market all the way back to its uptrend 50 SMA test level. So hopefully that makes sense. I'll continue to do more of these videos. The more of them that you see, the more different, or the more market scenarios you will see kind of play out throughout the days and weeks. And this will become more like a second nature to you, if you will. So to wrap things up, the market, past week, we've been in a buy move. Today, the market dumps. Everyone thinks it's because of Jerome Powell. Yes, maybe he played a role. But really the reality is the market goes from uptrends to downtrends every other week, every other month. And the 50 SMA on the 30-minute time frame, open, high, low, close charts, dictates the motion of uptrend and downtrend. The volatility index is a secondary market that we use to help identify if the markets may be positive or negative. Or like this example, how we can be bearish the market while it's in an uptrend because the VIX is signaling to do so. So though the market might not be saying it, the VIX is saying it. So be bearish, pulling market back even though it's still in an uptrend. So we'll post more of these videos. I hope you guys enjoy them. Leave any comments you guys have down below. I will make sure to keep posting these videos. And so hopefully you guys pick up on it. Hopefully you learn from it and hopefully you can use it. Cheers. Have a good one.